and what changes your thought process. So really the best way to understand that is, what are the hot sectors? What are the hot themes? And what are other sympathy style plays? How can you make money off of one particular runner, but on other names? And that is what we call the sympathy play. Now, in order to have sympathy plays, you need to identify what those hot sectors and themes are. So we'll start with most recent in the market, where GoPro. This was the start of the very, very hot IPO runs. Now, IPO being an initial public offering, this is the first opportunity where public companies are available for people to buy on exchanges. And GoPro had this amazing IPO where it just about doubled in 4 days. And it really set the tone for what was to come on future IPOs. And MBLY is another example where it traded almost 40 million shares on the IPO day, ended up sitting back a little bit, and then ramped to new higher days, again doubling. And the same thing with Loco, where it IPO'd, and once again it doubled and then some within the first week. So it was a very, very hot IPO run, and you needed to understand that because, for one, it gave you a trading opportunity. It might be worth the risk buying that first IPO day, given how all these IPOs have been running. Whereas typically you might kind of wait for a trend to develop or these IPOs to settle off and to wait for a better opportunity. But for right now, it might be a missed opportunity if you don't buy that first day. So that's what a lot of people were doing. And with that, they were able to get some great upside. The second thing to understand about these is that secondary run. It's good to identify that this IPO ran up, consolidated, and as it started to gear up as an ABCD type pattern on the daily chart, it had that secondary run where it went on to more than double yet again. And the same thing with MBLY, where I had that IPO, it consolidated, and then it went on to more than double. Same thing we saw with Loco. Had that huge run, consolidated, and started to ramp back. And then about 50% move from the lows. All of these big IPOs were all leading up to the biggest IPO, I believe, ever. And this was Alibaba. It traded almost 300 million shares on that IPO day. And it followed the same idea where it didn't double on the first couple days, but it did that fade off, and then it's been straight up since forming that bottom. So again, the takeaways from this is, what are the hot themes, the hot sectors, what's going on in the market right now? And that means that there's a lot of opportunity in IPOs right now. There's a lot of opportunity a couple months after these consolidate and they start their secondary runs. And although we have great borrows and availability, we need to be careful with our shorts, because although typically you wouldn't think that this overvalued stock could then become double and triply overvalued, it can in this market. And that's really what you have to understand. The next thing to understand is that hot theme. I showed you plug earlier, and this was a huge fuel cell run. And to really understand and capture all the profits that are available in the market, you need to understand what are other stocks that you could trade that are in the fuel cell sector. That's your edge. You may not be trading this one, or maybe it's too expensive in the 10 range. Is there something else that you can trade that also is mimicking those moves? BLDP. BLDP had a very similar move and major volume and gave the same opportunity that Plug did at a different price level. And lastly, FCEL, same fuel sector, and yet again, even at a half of the price of BLDP. So all these stocks gave the same opportunity, but at different price levels, and they were all based on that plug move. Another hot theme recently has been the security plays. And you saw this chart when I was explaining former runners, but it was a major mover. And it started to run, and there was a shooting in Ferguson, and everybody was looking for security plays to be able to potentially help the situation, the shooting. And that ended up catching some shorts off guard, and it ended up turning into a major short squeeze. So with that, everybody was looking at this where it was going 5, 10, 15, all the way up to 30, and it almost ran 1,000%. It did run 1,000%. And they wanted to be able to trade other stocks. What else can we trade off of this name that we could take advantage of? And then that's where VII came in. That's where ISNS came in. And even a big board, Taser, started to rocket. And that's a lot to move a big name like this. And you can see the first move that it took, and then it had the nice big breakout. Ended up continuing to go on and faded off and whatnot, and it's held the trend since compared to the other ones, because this is probably the most legitimate out of all the other ones. The reason that those others squeeze is because everybody knows that they're junk, but they short because they're junk. And then when the stock starts to hold, then they kind of got to scramble for the cover, and it drives the price up again. So again, the idea here is you've got that main driver, DGLY in this case, just like Plug was, PLUG. And then you can look for the other sympathy plays. What else can you trade in addition to the main driver? And that's where you get these other opportunities on ISNS, VII, and even Taser. And just most recently, one that should really hit home for quite a lot of traders is the Ebola sector. And the reason it should hit home is because it was literally just last month in October, right before the release of this DVD. Now, some of these moves were incredible, and not everybody had seen the move that DGLY had given. Maybe there's new traders in the market and whatnot, and this was your first experience of just because you don't think it can go any higher doesn't mean it can't. And that's exactly what happened here. Once again, a hot theme, hot sector. What is the leading stock? What is a leading name? And what other names can you trade based on that main driver? So these guys, I don't even know if they shipped anything before, but they make the hazmat suits and whatnot for dealing with Ebola. And they finally got some orders in recent weeks. But before that, they really had nothing. And this turned into a pretty major short squeeze. And people look for opportunity in other places. What else could be traded besides just this name? What else has Ebola in the name? What else deals with Ebola sector? So with that, we had APT. And APT was something that hadn't moved, just like Lake, for ages. And it had a nice big, almost triple off the lows with major volume. What else can you trade? Well, then there was VSR. VSR within a couple days had a great move. Not even really involved with this sector, but they took advantage of it. They put out timely PRs with keywords to be able to attract investors to it. Ethical? Absolutely not. Legal? Questionable. But they did. And it gave a major trading opportunity for traders. And last but not least, IBIO, which most of you guys remember, came off the lows just like Plug, around 25 cents, 50 cents, and then ramped up all the way up towards the 350s before caving back in. Point being, you had that main driver, you had that main theme, Ebola, and you need to look and understand and realize what other opportunities there are in the market for you to be able to take advantage of during this hot time. And what I mean by hot time is when the media is all over it, when there's fear in the market, when people are looking for potential solutions and don't really care about the near term. They just want to be part of something that if there was a big outbreak, they potentially will make money. And this leads us into one of the most interesting, most popular questions and really most important things that you need to understand, and that is float rotation. And what does it mean? And a lot of people think that just because the float has rotated means that it's a buy, it's got to go higher, and that's not the case. And some people might not even know what that means. So the float is the shares that are publicly available for you and I and the rest of the public to trade. And when that float rotates, meaning, for example, Lake has about 4.5 million shares outstanding. When it trades 4.5 million shares, and then it trades 9 million shares and 20 million shares, the float is rotating over and over and over again. That gives people the opportunity to buy or sell as many times as they want, 3-4 times over during that given day when the float is rotated. So you'll see that there's not very much volume coming into this move, but this day on October 1st, it trades over the float. It trades 6 million shares. That means that people could have come in and come out almost twice the float, which means that there might have been traders that were in the 750 range, then they bought in at the 8, they might have sold at 9, and it's a game of numbers. The more volume that trades, the more shares go from less hands with a lot of shares to more hands with little shares, which give the ability for a major move because there's not that 1 or 2 traders that are just sitting on it with big size. Very similar to an OTC promotion where they send out the mailers to your snail mail mailboxes. The goal of that is to take shares from 1 or 2 seed shareholders and disperse it amongst thousands and thousands of unsuspecting investors to ideally create a market. And that's what's going on here is you've got people that might have pretty bulky positions because they want to be part of the next big thing. And throughout the day, it's grinding them out, giving them the opportunity to sell. More people come in, and then they start to get a higher average. Instead of having a 7 average, they might have sold at 8, then they rebuy at 8.50, then they sell at 9, they rebuy at 12. And it's just a continual rotation in and out, in and out, in and out. And at the same time, it's attracting shorts. Keep in mind, Lake had nothing going for it. Neither did APT or any of the other ones that I was talking about before this entire outbreak. Now, shorts know that. Shorts know that nothing's going on in the company. Shorts know that they need money, so it's very likely that they raise capital. But if these shares that people are accumulating, if they're holding tight and it's trading double the float, you're attracting shorts, you're attracting new investors, and the only people that are really scared is the shorts because they short based on the company's fundamentals, based on the fact that it's overhyped, but yet the price trend holds. And the more times that it gives the opportunity for people to get out, the less panic there's going to be on the pullbacks. You can see here on the uptrend, it starts to go up, consolidates all day, and it holds a solid trend. It starts to pop up, pulls back, holds a solid trend. It gives opportunity for traders to go ahead and take profits. And as that opportunity presents itself for traders to take profit, it also brings in new buyers at higher levels. So now you've got all these people that might have bought it from 7 to 9. They might take it off around 8, 8.50. Then it pops to the next level towards 10. It might shake them out towards the 10s, the 9.50s. Then it starts to run. Might dip a little bit, scare people out around the 12s. Then it runs all the way up to 17. This dip might get people out to the 16s, dips all day, trends still holding though. And at the same time, these big moves not only attract shorts, but they trap them because some people think, well, this thing was just $10, now it's 17, I should go ahead and put some on. I should put a short on just in case it's gonna pull back. And then all of a sudden it jumps up another $3. And then they finally see a nice little pullback and they think that's it. I'm gonna go ahead and add. And then all of a sudden the next day it's up another couple bucks. And they start to get really upside down. And then the panic comes in. And this is a short squeeze. All these people that shorted based on fundamentals and the reality that there's nothing going on at the company didn't realize that none of that matters on the way up on the float rotation. Float rotation, you cannot fight the trend. It's fine to short along the way, but if underlying trend holds, you need to either capture the profit into the pullbacks or respect your plan, respect the stop. Because if you're one of those that adds, you're going to end up panicking into the parabolic moves, into that squeeze. This entire move is an emotional squeeze where people are panicking. The only time that fundamentals matter is on the backside, once that squeeze is done. And from that point forward, you can see you short pops along the way down. You join that trend on the way down, just like you join the trend on the way up. As long as it doesn't break the uptrend on the way up, you don't want to fight it. As long as it doesn't break the uptrend on the way up, stay out of the short or at least have a plan As long as it doesn't break the downtrend on the way down, you can short all pops. But this is the difference between the front side and the back side of the move, and it's not always that easy. APT had a very big secondary squeeze. So you go in with a plan, but you have to respect it. The most important thing to understand with these float rotation plays is that the stock price is just a number in time. And we trade tickers, not companies. The fundamentals of the companies do not matter on the way up. Sure, you probably 90% chance you'll be right long term. But that doesn't mean that you can't blow up in the short term. And anybody that started shorting DGLY thinking that they were smarter than this name, or started shorting LAKE, although they were right in the end, does not mean that they would not have got a buy-in at the top, which is risk, or they run out of margin at the top and get bought in on a margin call. So no matter, even if you're right in the end, point A to Z is not always 100% trade. A lot of people don't understand that, and they think, well, I'll just add a little bit more. I'll just add a little bit more. And then all of a sudden, they end up in a very, very bad spot at the top because it's gone 50% further than they could ever imagine. A very similar one back in the day was VISN. And you can see that this had a very similar run, caught some shorts, and then it ran all the way up to 30. And even a little bit further back was BVSN. And you can see this major short squeeze. DGLY and Lake could have easily gone to 50. This is probably one of the biggest and craziest short squeezes that I've ever seen. But point being is, just because you think that it can't run anymore does not mean it can't. These are just trading vehicles. The second that you try to treat a momentum stock as a fundamental play, and that's your bias to be short, that's when you're going to get ran over. And remember, unfortunately, in this business, all it takes is one bad trade and it can wipe you out. So that's why you always need to have rules